Hi, welcome to this episode of AU Select Scoop. Today, we have the opportunity to hear from one of India's leading Chief Investment Officer, Mr. Vetri Subramanium, who joins us from UTI Mutual Fund. As most of you would have been following Indian equities, which after a dull start to 2023, delivered robust performance since April till date. On a calendar year-to-date basis, the large cap index is up 7%, while the mid cap and the small cap indexes are up 15% and 16% respectively. Having witnessed that, there are a few near-term concerns for investors like abnormal monsoon and a shock in crude oil prices, which could feed into headline inflation, delayed interest rate cut expectation, global growth slowdown and recessionary concerns, and any derating of India corporate earnings growth rate. Firstly, we would like to have your views on the markets as Indian equities are at lifetime high and interest rate cycle at its peak.
I think that's an interesting question. There's nothing unusual about markets being at lifetime highs. In my own 30-year investing career, market has been at lifetime highs several times over that entire period. I think what matters is whether you are at an uncomfortable valuation, whether you are at a valuation high rather than the all-time high. So that is the first point that I would make. Actually, when you look at the data, the market at the current point of time, while it is starting to get expensive, it is not as expensive as it was in September, October of 2021. So at this point of time, we would say investors can continue to sort of look at equity, but certainly exercise some degree of caution. And when you think about interest rates, we do think that interest rates in India have more or less reached sort of the peak level in terms of the tightening expectations from the Monetary Policy Committee. It is possible that the Fed may continue to hike some more in terms of rates, but given India's current inflation rates being well within the target rate of the MPC, and given that the policy rate is already well above the level of inflation, we think the Monetary Policy Committee is not under much pressure. But at the same time, the target is to get inflation down to 4%. So it is possible that we will have to be quite patient in terms of an actual cut in policy rates.
Thank you for sharing your views, Vetri. Basis this, what investment strategy should one follow in the current market environment?
So, as I mentioned in my previous point, valuations at this point of time are really not in what I would call the attractive or the green zone. They are somewhere at the top end of the amber zone and actually now starting to enter what I would call the expensive zone. So this is a time for investors to be more cautious about their approach towards equity. If you are doing a SIP or an STP, there's no problem because by definition you have already staggered your investments. But I think a good kind of fund structure to look at this point of time is a fund in which we as fund managers are taking responsibility for the allocation being made to equity. So if you look at products like a balanced advantage fund or a multi-asset fund, these are schemes in which UTI runs its own proprietary asset allocation framework with reference to valuations in the market, with reference to valuations of equity vis-a-vis fixed income, and based on that we decide what level of allocation should be made to equity. So this is a product in which we as the funders are taking responsibility for asset allocation based on a valuation framework, and therefore at this point of time I think if people are looking to make large lump sum investments, this is the kind of product in which they could consider, simply because we will anyway be taking the asset allocation call in the product.
Thank you, Vetri, for sharing your views. I'm sure this will help investors gain clarity while making investment decisions. The key takeaway for us in this scenario, where equities are at lifetime high and interest rate cycle at its peak, is to consider balanced advantage funds or multi-asset investment strategy which helps navigate market volatility. Also, consider staggering your investment into equities and follow an asset allocation mix suitable as per your risk profile. Happy investing!